Hello, the virtual investor here again, and today we're going to go over how to avoid paying capital gains. And capital gains, depending on whether it's a short-term or long-term, could be anywhere between 15 and 20%. So let's say you're selling one of your rentals. You've owned this rental property for a long period of time, and you don't want to pay the depreciation recapture, and you don't want to pay the capital gains on the sale of this property. The best way to do this to avoid paying capital gains, really the only way to do this, is a 1031 exchange. And with the 1031 exchange, it's an IRS code that allows you to sell your property and pick up other like-kind properties of equal or greater value. Basically, you're just transferring from one asset to another, but it's a like type asset. So there's a couple different rules here. You have a 45-day rule. Within a sale of your property, you must locate up to potentially 3 or more, in certain instances, properties that you're going to be purchasing. So you got to, within 45 days, you got to name these properties. Then there's the 180-day rule. And the 180-day rule is you must close on whether it's 1, 3, or 5 properties, however many you're closed on, you must close on all of them within 180 days of the sale of your property, of the sale, right? So you have basically a month and a half to decide if you can, to figure out which properties you're going to buy, and then 6 months in total to actual close on those properties, more or less 6 months, close to 6 months with 180 days. So you have to meet the certain criteria, and it's not easy. There's a lot of moving parts. And if you don't say you're closing on 3 of them and you don't close on 1 of them at a time, you don't get that tax benefit. Now falling into that where you're going to have to pay capital gains, unfortunately, on it. So they are quite restrictive, onerous, and a lot of people don't like to use them. People like myself, I really don't like to use this, and I have never done it, but I'm probably going to be doing it on a couple of rentals that I'm selling in Pennsylvania here and shifting them to other states. And it's a process I'm definitely not looking forward to, because especially in this market, it's really hard to locate properties quickly without overpaying. Right? You're going to end up overpaying for a property, which you don't want to do. So for me, doing a homework in advance, getting that property listed and sold, hopefully quickly, that I can shift it into these other properties or property and make this happen without having to pay the capital gains. So that's what I'm hoping to do. And for those that you want to avoid paying capital gains, this is really going to be your best way to do it. The only other way to do it is purchasing a property and living in it within a period of 5-year period. I think you have to live in it for 2 years or more to get the tax benefit of the resale. For an individual, I think it's $250,000. For a married couple, it's $500,000. So those are really the only 2 ways you benefit and can sell a property without any tax consequences to it there. And hopefully you guys got something from this video. I appreciate it, and I will catch you at the next video.